Dude, we have some vicious price action today. My goodness, I'm literally on the 1 minute right now. As you can see, this price action is pretty crazy. This is a scalper's dream right here. See this? Just up, down, up, down, up, down. Anyway, not for me. This price action is so bad, I decided to just record something, and we're going over grading. Okay, what is grading? I'm 99% sure that you grade swings passively, but you just don't know that you do it. Because that's what grading is. Grading is looking at the previous swing, okay, or just looking at a swing in general on any time frame and grading it. Grading it, in other words, basically means analyzing, looking at the reference points that are in it, how price is reacting to the swing, how price is reacting to the reference points within the swing, what signatures have been created within the swing, what signatures have been created after the swing's been delivered, and stuff like that. Basically just analyzing the swing and how price is reacting to it. That's all it is. And since this price action is so bad and there's so many swings, you know, just from 9:30 all the way to now, 12:52, which is the lunch macro. There's a lot of swings going on. So we're going to analyze each major swing, like this one here, or this one here down to the high to the low, or even this one here, this one, and then we got another one. We're just going to analyze each one, all right? So we're going to start from the big one, all the way from over here. And let me turn down my volume, because apparently it is very loud. Anyway, this swing here, like I said, grading is simply grading the swing in terms of what reference points are in it. I don't even have to explain. It's literally just analyzing the swing as a whole and grading it, and that's what we're going to do right now. So as we can clearly see, the swing is a drop lower. That's what happens. This is a price leg lower, so we should see a lot of bearish reference points within the swing, okay? First, right off the bat, we have this fair value gap right here, but it's instead transformed into just this because price partially fills it. So we have this right here, in which I don't think price ever hits it, so it leaves that gap open. Next, we have a mitigation block, which already gets hit right here. It gets hit and distributed, so this mitigation block is gone. And then we have another mitigation block right here. We have them right there, and then we have a fair value gap within this mitigation. I might just put the quadrants on this one. Yeah, I'm going to put just quadrants on that. So we have a mitigation block and a fair value gap right next to each other. And then we have another mitigation block down here, which literally gets violated the next swing back up. So let's see how price is overall reacting to this previous swing, and how can we base future price action just off of our grading or our analyzation of the swing. So right off the bat, while we're in a discount, we're disrespecting opposing PD rates. See this fair value gap? Completely gets ran through. This mitigation block, the high is broken. So the mitigation block and the fair value gap are gone. As soon as that happens, we come above an equilibrium. Okay, now, since we came above an equilibrium, this can mean two things. That we want to break the high of the dealing range and, keep going through it for a run on buy side liquidity. Or, we're coming to a premium to then go back down into a discount and shoot past the dealing range low. That's what could happen. So let's see. Price comes up past equilibrium, right? Now if I put quadrants on here, you can do this. Listen up. Since we have quadrants on this swing now, anything above the upper quadrant for a swing lower is a deep premium, okay? Anything below the lower quadrant for a swing lower is a deep discount. You've heard these terms before. So it visits a premium here, but does it visit a deep premium? No, it doesn't come above the upper quadrant. So since we see this as like, okay, we've disrespected this mitigation block and this fair value gap that are literally in the same proximity, right? We disrespected that for what reason? To come up into a premium, and it's not heading into a deep premium, like very, very expensive prices, in this case, just based off of this swing. So what that can tell us right off the bat is we're in a premium, we've created this downward swing, we're retracing, and we're leaving this gap open. Do you see the sentiment that's forming here? So what can we see? We can see price drop, right? Just based off of this, we can expect price to drop. Does it drop afterwards? Yeah, pretty slowly, but it does do its thing. It does do its thing. So that's one swing out the way. Let's analyze this next one. Let's do actually this upswing right here. Let's do this upswing. We're gonna delete all our drawings. There's a lot of drawings that I marked here. My goodness. And then we have that fair value gap. So here we are. here to here. We got the deep premium, deep discount, and then discount and premium. And then the equilibrium right here. Here we go. So let's mark out the PD arrays we have here. We have this rejection block here to this candle to here. I haven't taught rejection blocks yet, but you'll learn them in the future, I promise. So we have this rejection block here. It's equilibrium. If we see that get disrespected, we could see price, hit the bottom of the dealing range and shoot through it, which is in a deep discount, actually. So if we see it push through this rejection block, it'll clearly tell us that price does not want to sit in a discount. Instead, it wants to run through it. So we have a rejection block here with a fair value gap right here also. If we drag that out, you can already see how price reacts to it. We do have this order block here. Yeah, that is an order block. So we have an order block here. But if we look over, yeah, price disrespects it. So just turning all the drawings off, if you can just eyeball it real quick, you can see that price basically disrespects everything. It doesn't even, it's ruthless. It doesn't even care. So, and then if we just look at how it reacts to the previous swing too, like, okay, you can grade two swings at once to get a better analyzation on the previous swing that's about to form. So how we analyzed this one earlier, and we know that price is about to go lower, we can analyze the swing that reacts to this price swing lower. We can analyze both of them, okay? So what I mean by that, right, is this price swing here, or this price leg up higher here. Since we know that it's going down due to the failure swing here, it failing to purge liquidity, it leaving a gap open, and it not wanting to it not wanting to stay in a premium of this price swing here, we can see price go lower. So since we know that price is going to go lower just based off of the reaction of this swing here, from this move up here, we can, or we should be expecting opposing reference points within this swing to get disrespected, right? Now, if we turn the drawings back on, we can clearly see that they get disrespected, right? Yeah, they do. Now you're probably like, okay, don't we grade the next dealing range? We would, if it was a dealing range, but it's not. It's literally not. Reason being, it failed to purge buy side, but it did not fail to come back and purge sell side. So what you want to look for is a swing that purges buy side. So if we do mark this as a dealing range, we wouldn't mark that high. Reason being, that deepest swing before price reversed, it did not hit this high here. So we couldn't count that as a high of the dealing range. Instead, you see right here how we have a bunch of equal highs right here, or basically a bunch of accumulated liquidity here. Price, listen up, it comes up, purges that liquidity. See that? Comes up, purges that liquidity right there. That's that liquidity purge. So it comes up, the deepest swing after the liquidity purge, right? That's your high of the dealing range. The low after sell side has been, ran through, which is this right here. That's sell side right there. That low. The low of the rejection block, that's sell side. Once that's been ran through, the deepest swing after, price reverses away from the purge of that low, which would be this low here. That's the deepest swing. This high to that low is the next dealing range that you grade, right? And we were right. Look at that. You see how price disrespects this order block here. If you want to remove this real quick and add just the quadrants to it, you can see that price doesn't even care. Like, look at the candles. It bounces around off the equilibrium a little bit, and then it says, okay, no, we're just kidding. And then it runs through it. And then next, it just completely fills the fair value gap, not even caring about it. So we can clearly see that price wants to continue dropping lower. But this is a very consolidation-y, weird price action type of day. So this price action is really not advised to be traded at all. But I'm just using this because it was such a swingy, price leggy type day. So that's why I'm using today's price action to teach you grading, okay? And then as you can clearly see, we had another dealing range get formed after the liquidity purge and the retracement of this mitigation block right there. As you can see, it respects it. It respects the mitigation block as it's purging, as it's purging liquidity, and then drops lower into the sell side down here and, disrespecting the rejection block. If you want to see the quadrants and see how price reacts to it in equilibrium, sure, I'll draw that out for you. And yeah, there it is. You can clearly see, if we delete this real quick, you can just see how price just is ruthless. At this candle, the rejection block is gone. So the rejection block is now violated. Now, here is another swing we can grade to see how price would want to react to the swing and how what could possibly happen. Now, this is a recent price action right now, so I might add like a little conclusion at the end of the video to see how price reacts to it after, just to see what happens afterwards. What's the aftermath of the reaction of this swing? So we can clearly see that price wants to go lower, so we want to see if he wants to continue doing that. Just based off of the previous swings we analyzed here, but let's see if he wants to keep going lower, right? We want to see if we can keep getting that drop lower so we can make some bread out of this market, so we can keep milking the expansions of this market when there's barely any expansions. This, like I said, this is a scalper's dream. Like, bro, the amount of money a scalper can make on here in a 15-second is amazing. But anyway, this swing here, we clearly can see that price wants to go lower, but we have to confirm it. So let's grade this swing. Right off the bat, we have a break in market structure. Whoa, pretty cool, isn't it? And then we got that fair value gap here. Price reacts to that fair value gap, drops lower, creating the rest of the swing right here. Let me delete this liquidity purge mitigation block. It hits the fair value gap, dropping lower, and then that's where the entire dealing range is created. So we have that break in market structure lower, showing that price wants to go lower again, but we have to still confirm it. So we're gonna hide this real quick. We're gonna just hide it. So we're gonna delete this fair value gap and keep the break in market structure there just for confluence purposes. We have this order block get touched from the pullback of this wick, and it gets exhausted from this expansion lower, so that order block is no longer there. We have lots of fair value gaps here. We have one right there. Let me see if that's a mitigation block. Is that a mitigation? That is indeed a mitigation. Look at that. That is a mitigation block right there. If you look real closely, you can see how it creates a low, comes up, and breaks the low. That candle's body, that gray candle's body is the mitigation block. So if we pull our chart back down and mark that as the mitigation, there it is right there. There's that mitigation. And then what we have right inside of it is the fair value gap right here. Cool. Very cool, isn't it? I know. Let me pull this out and do it to the left side. There we go. So it doesn't look all janky. So we can clearly see how price is reacting to these PD rays. It's the same situation as this swing all the way over here. Yeah, this same swing over here when it came up and disrespected a mitigation and fair value gap. Same exact thing that's going on here. And then this order block too, it just completely runs through it. If you want to see, put the quadrants on here, draw it out. It disrespects it like just smooth like butter. So since we see that, we could say that, oh, price wants to reverse now because it's disrespecting a raise. It's disrespecting opposing a raise. And even when it created this immediate rebalance, it failed to keep going lower. The immediate rebalance wasn't what's the word? It didn't have much influence on price. So the algorithms were like, man, forget about this immediate rebalance. We're disrespecting it, and it literally just ruthlessness runs through everything. And then even if we unhide that fib retracement, which is right here, we can see that the fair value gap and the mitigation were above the equilibrium. So if it has a willingness to disrespect this fair value gap and mitigation, that means it's not respecting the equilibrium and it's going to disrespect it, right? It does do that. It comes up, disrespects both PD rays here and the equilibrium with it. We are now in a premium, and then we visit a deeper premium, which is, extremely expensive prices, according to this one, right? We hit that, come down. Is that a liquidity? Not liquidity purge, but is that a break in market structure? Wow, very close. So we do have equal highs up here too. We have equal highs, which is buy side liquidity. I'm sure that'll come in clutch later. Price visits a, not deep discount, but deeper premium. After it does that, it respects it, comes back down into what? Into what now? Into what? This reclaimed order block. You're probably like, what? Yeah, this is a reclaimed order block now. This is a reclaimed order block. Why? Because price came up, dropped lower. So that right there is a distribution. You're probably like, well, didn't we say it disrespected it earlier? That would have been the case until I just realized that price came up and hit it from this wick and dropped lower, distributing and exhausting the order block. So since it's been used, price can come back around and use this as a reclaimed order block. If I have that even marked in here, I don't, but I'll just rewrite it if I can. Reclaimed order block. There we go. There we go. Reclaimed order block. It comes back down, respects the equilibrium of it. Pretty nice. And if this was a fair value gap, that would be an entry drill, but that's not. It comes down, hits the reclaimed order block, delivers higher, and then it starts just going into a crazy, crazy consolidation since it's lunchtime. But we still have equal highs right here. And actually, if we scroll over, prices recently hit that as we're recording this. Actually, at 12:58 is when it purged buy side liquidity. Not purged it, but it had a ran on buy side liquidity. So if we drag this, whoa, that's weird. I didn't know you could do that. Anyway, if we drag this out, right, and readjust it because I just messed that up, my bad, guys, and we apply the equilibrium to it, let's do that real quick. Apply the equilibrium to this reclaimed order block right there. We can see that even though it does not have, you know, a willingness to deliver off of it, so a lack of displacement, it is still respecting its equilibrium. And what time is it? It's the lunch macro. The lunch macro is built to consolidate. Okay, that's what it's built to do. That's one of its purposes. Is it's built to prepare price for the New York close, which is 1:30, which is about 20 minutes from now. Okay, so this is not random. This is not just, oh, price is consolidating for no reason. No, it's doing this for a reason now. We have accumulated liquidity up here. Not well, yeah, basically accumulated because we have a bunch of relative equal highs right next to each other. And then we have the high of the dealing range over here, which is also buy side liquidity because it's the current dealing range that price is trading in, right? It is. It's the current dealing range that price is trading in. So if we delete this fair value gap and mitigation, it's still respecting the reclaimed order block, but it's consolidating. Why? Because at 1:30, it's going to rally. It's going to rally. If it continues to respect what's the word? Allied PD arrays, like basically saying if price is heading higher and it's respecting bullish reference points. That's what I mean by allied arrays or allied reference points. It'll have a tendency to go higher. I can definitely give you that aftermath and conclusion of what happens to price, you know, once I end this recording. But yeah, we could see price continue pushing higher all the way into this intermediate term high here, and maybe all of these equal highs up here. We could see that. That's a possibility. It's not too far away. It's like 75 points, but that's a possibility, okay? This is grading. It's not hard. I'm sure you do it already, but you just never knew what the concept was called. You probably analyze your previous swings. You probably have a whole model for it. It's probably a part of your game plan every time you wake up. Probably, maybe. I don't know. But hey, you know what grading is now, and it's very useful to me ever since I learned what it was. I've always been doing it, but since I learned what grading actually was and how to properly do it, it basically just clarified, you know, how to grade and analyze swings. It's really called grading, how you grade a swing. That's really what it's called. But if you want to say analyze, it's the same exact thing. Anyway, enough yap. I'll be ending this here. I hope I taught you well. I hope this can help you when it comes to these crazy algorithms and central banks, JP Morgan, Goldman Sachs, all of them when it comes to these manipulated markets. And I'll see you guys in the next teaching. Good luck and good trading.